Wow, what a day today. What's up, everybody? Welcome back, and if it's your first time here, I hope you stick around. All right, so what we're gonna do is we're gonna go through the markets today, see what price action is telling us, see what the key levels are, if there's any bullish or bearish edge on the charts. Just looking at the volatility today, the gap up and follow through, impressive. CPI gave the market a reason to rally. It came in a little cooler than expected, so risk on apparently. So we'll take a look at the charts and let's hop on in. So on Thursday, the S&P finished up 5.54%, the Nasdaq finished up 7.35%, the Russell finished up 6.11%, and the Dow finished up 3.7%. Huge rally across the markets today. So let's see what we have going on, lift the hood a little bit, and kind of dig in. So before we get into the S&P today, I kind of want to talk to you about why you're taking a trade, right? You want to have an argument to whatever your bias is, bullish or bearish. But is price at a historical support resistance level? Are there divergences on both oscillators? Is it in a Bulkowski pattern? Is it at a Japanese reversal candlestick? Is it at a perceived area of value at a 786 or an 886 Fibonacci retracement? Also, is it at the pattern completion zone of a harmonic? If you don't have an argument with all five, it's just a weaker argument. So if you have price consolidating in a rising wedge, for example, that's just one piece. That's a weak argument. For example, if you have a rising wedge at a level of inflection at a historical support resistance with a Japanese reversal candlestick with bearish divergence on both oscillators at harmonic completion zone, that would be a stronger argument to why you'd be taking your position. It's not just based on, I feel price should go down, I feel price should go up. It's based on empirical evidence on the chart's history that you can provide a solid argument on why you're taking that position. Never make arguments based on I feel. Imagine, how crazy is that? All right, rant over. Let's get into these charts. First up, looking at the S&P. So we still have this bearish shark in play. The pattern completion zone is at a historical support resistance area at 40.58. Looking at this Japanese reversal candlestick pattern here, this is a bullish kicker where we have decreasing in price and gap up with a follow through, and it almost is a Marabazoo candlestick pattern as well. Impressive on high volume with your MACD increasing in positive momentum and your RSI in the bullish control zone. Impressive. On the 4-hour for the S&P, I pointed out the other day some hidden bullish divergence that was maturing on your MACD, and we finally saw some resolution to that. We are back above the 200 simple moving average on the 4-hour as well. RSI in the bullish control zone. This is what you want to see if you want to. Next up, looking at the Dow on the daily. So we did have this idea of some bearish divergence. Hasn't followed through yet. You are building positive momentum again on your MACD, and you still are in the bullish control zone. But what did you do today? You back tested your 200 simple moving average on the daily and also printed a bullish kicker Japanese reversal candlestick pattern right in between the level of inflection. So what we're looking for on the Dow is to get back above these levels, hold it as support, and break these previous highs. Impressive. Also, what was called out the other day was 4-hour hidden bullish divergence on your MACD. We finally saw some resolution right now, but it looks like you're working on some bearish divergence slightly from this high to the next high. One high to the next high. Let's see if we can get a higher high on momentum on your RSI for the 4-hour, something to pay attention to. Looking at the Russell on the daily, so we are headed back to target 1. We're headed back to the 200 simple moving average. I do think you will test it in the next coming day or two, maybe Monday, maybe Friday, but you're definitely going to hit target 1 based on this. If there is follow through from this Japanese reversal candle, right? You're seeing this across all markets, bullish kickers just exploding to the upside and closing towards the highs of the day. Fantastic. And you also see you have bullish momentum building again on your MACD, and you are in the bullish control zone. You were bullish until you were not. Taking a look at the 4-hour on the Russell, I called this out the other day, a potential hidden bullish divergence from one low to your next low with a lower low on momentum, implying that sellers are trying but cannot push prices back down to these previous lows, which ushered in a nice reversal to the upside back above the 200 simple moving average on your 4-hour, and your RSI back in bullish control zone, and you're building bullish momentum once again on your. All right, taking a look at the Nasdaq on the daily. So it did look like your bearish divergence on your MACD did play out, which you also had on both oscillators here, your bearish divergence. It played out. You held the heart line of this downsloping parallel channel, got back above your supply line, and couldn't hold this support, but with the CPI data coming out, gapped up, closed towards the highs of the day. And if you look, this is another higher low confirmed. Impressive. Positive momentum beginning to build, approaching the bullish control zone and out of neutral on the daily for the Nasdaq. Taking a look at the Nasdaq on the 4-hour, you do actually have some hidden bullish divergence also on the 4-hour, from one low to the next low, one low, lower low on momentum, but could not break below this price. You see the gap up, 4-hour candles approaching the 200 simple moving average. You are in the bullish control zone on your RSI, and your positive momentum is beginning to build again. Great developments today. Let's see some follow through tomorrow on Friday, and we can be a little more bullish. Currently cautiously optimistic, leaning bullish, but let's get some follow through. Looking at the DXY on the daily, well, support at historical support. Impressive. I'm not surprised. But what is good is you invalidated this bullish engulfing candle from the prior trading day and immediately saw follow through downside pressure, and some bids did come in, it seems, at a level where you would expect bids to come in. Taking a look at the 4-hour on the DXY. So you are oversold currently, but you do have negative momentum continuing to build, and you did find support temporarily. You know, limit bids at a place where you'd expect to find limit bids. I do think if you break below these levels, you will see the next level at 104. And going back to the daily, the pattern completion of this 3 falling peaks, we pointed out the other day, you measure from your second valley to the top of your pattern here, and you play it from the break of your second valley. It looks like the dollar is going to come down and test your 200 simple moving average, but that can only happen once we break these levels. So we go level by level. Break 107.68, next stop 104, next stop 200 simple moving average. You do have negative momentum continuing to build, and you are in the bearish control zone on the DXY. Get wrecked, dollar. Taking a look at the VIX on the daily, I did call this out on the Sunday recap. You did have this bullish harami with some follow through, but immediately rejected once again, confirming the 200 simple moving average, which was rejection on November 3rd, November 2nd, and October 31st, is still being rejected. Now breaking another demand line, which you have going back from June 30th, 2021. Your bearish divergence played out beautifully. You had it on both oscillators, negative momentum continuing to build, and you are in the bearish control zone on the VIX. Get wrecked, VIX. Taking a look at US oil on the daily. Could you be bringing in another lower high? Possibly. That's only if you pivot here. You kind of have this spinning top towards the bottom here. You would want to see some follow through price action, resumption to the upside, and get back above 90.70. Maybe you're working on a double top here, break the neckline, and death. So that's not what you want to see, breaking this neckline if this is a double top here. Taking a look at ARK on the daily. So just when we thought it was all over and impending death was upon us, immediately disregarded this bearish Marubozu, also breaking down from a level of inflection, completely invalidated on the following day today, ushering in bullish divergence from one low to the next low. After your bearish divergence played out, really was a nothing burger, and price action resumption to the upside. It's beautiful. This is what you want to see, but the next thing you want to see is follow through. So after this bullish kicker Japanese reversal candle, you want another green candle to the upside to confirm that this pattern is real and valid. Taking a look at Tesla on the daily. So once you broke 209.07, it's like we discussed, straight down to 181. It happened real quick. But what happened here after you started to bearishly break down from 181.78? Buyers stepped in, defended this level, ushering in some bullish divergence that hasn't fully matured yet on increasing volume. And you can see where buyers stepped in and defended this level. This is exactly where you would expect to find limit bids, and always 100% of the time from this level is straight up, straight down, straight up, straight down, straight up. Why not straight up again back to 209.07? With this bullish divergence and hidden bullish divergence on your RSI, gives you a decent argument to take a shot here and have a stop marginally below 181. Taking a look at Apple on the daily. So we also discussed this bullish bat type 1 reaction, and look what you did. As of yesterday, buyers defended this level again, and immediately following had another Japanese reversal candlestick bullish kicker, gapped up, close towards the highs of the days. And what did we discuss? Every time between this level is straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down. Why not straight up again? If you're going for your type 2, this is what you expect to see following this price action. Again, it's not about the candle, Japanese reversal candlestick itself, it's about follow through. This is a massive statement candle closing towards the highs of the day. We also close these gaps. I do expect you to tag 151.93, stay above these levels long enough. So taking a look at Tesla on the 4 hour, this is your bullish kicker with follow through, but ideally you want to see these patterns on the daily. So as prices are selling off at historical support resistance, you immediately gapped up, closed towards the high, and had a follow through candle validating this pattern. If you wanted to play the 4 hour, your stop would be below the follow through confirmation candle, and you're going to be taking profits toward the first level of inflection and your 200, maybe trimming positions, seeing if you can get back above the 200. All right, thank you so much for going through the markets with me today. I really want to kind of keep this shorter, streamline everything for you. And if you like what you saw, please hit that like, that bell, that sub. You'll know when I post a new video or if I go live. If there was something you didn't see and you want to see it incorporated next time, please leave it in the comments below. And I'll see you next time. Thanks.